Welcome viewers to the fourth episode of Your Money, Your Taxes. I'm Paresh Shah, Wealth Advisor with Paresh Shah Financial Services, and with me here is Lalit Abichandani, CPA. Welcome Lalit ji.
Thank you.
Lalit Abichandani is a practicing CPA with almost 25 years experience. He specializes in US taxation. He's been running a successful practice in Manhattan. He and his firm provide tax service and tax planning for businesses as well as individuals. In addition to the regular trading businesses, his firm services healthcare industry, IT industry, hospitality and entertainment industry. He has done hundreds of offshore voluntary disclosure and streamlined procedure cases and has become an expert in foreign bank account reporting and the US-India tax treaty. He's a CPA, tax advisor to businesses, professionals, Bollywood industry, and a lot of film personalities. His website is youradvisor.com. So, Lalitji, without further ado, since our last episode, there have been a lot of questions from viewers. And I'm going to just dive straight into some of those questions. The first question that we had from some of our viewers is, what documents do I need to do my taxes?
First of all, thank you very much for calling me here, and thanks very much for the great introduction that you just gave. So with that said, it's tax time. People have tax filing on their mind, and they have to start collecting documents. So there are basically four types of documents that taxpayers are receiving. The very first and the most common ones are the W-2 and the 1099 that they receive from their employer. The next one is 1099 interest that you receive from a financial institution or a bank. You may have a bank account, or if you have a brokerage account, you'll get a 1099 dividend and 1099 for capital gains, etc. The third one is, if you own a home, you will get a mortgage interest form from the bank that lists down what is the mortgage interest that you have given, along with real estate taxes that you may have paid. The fourth one is a new form that government has just introduced. It's a certificate of health insurance. It's a form 1095 that the government has introduced. You have to bring that to your tax preparer this year. In addition to these four basic forms that you are receiving from these institutions, you may have spent money on various different things, on college education, job expenses. You may have spent money on medical expenses. You may have given charitable deduction, whether it is cash or non-cash. So you have to start collecting those receipts before you go to a tax preparer, so that you can maximize on your deduction and maximize on your tax savings. And last but not the least is the list of dependents. The tax preparer does not know who your dependents are. So you have to make a list of your dependents and bring it to the tax preparer.
Well, that's great. Thank you, Lalitji. But that directly leads into one of the further questions that we had got. I was going to come to it a little later, but since you mentioned dependents, one of our viewers has asked, who can I claim as a dependent?
Pareshji, that's very confusing for people. And also it's the most asked question during the tax year. Even after people have given their papers, they don't know who they can claim as dependents. So there is a list of relatives and that they can claim them as dependents. But in addition to that, people may have supported their friends or a distant relative, and they can take deductions for them as well. And don't forget, each deduction is worth $4,000. So you should list down all the deductions and take these deductions. The basic ones are your children, including the newborn child. So if you have a newborn child that was even born on the last day of the year, you can still take that deduction. So it's your children and relatives, and as well as friends if you have supported during the year.
Wow, that's great. But then some of our viewers have asked, what about our furry family members? That's our pets. Can we claim, and there's a lot of money being spent on pets. So can we claim our pets as dependents?
Pareshji, that's another question that they bring the receipts for. Unfortunately, the government does not allow us to take the deduction for the pets. You do require social security number or a tax identification number, even for the dependent that you are going to claim. So the government does not give tax identification number or social security number for the pets. So I'm sorry to say the answer is no, no matter how much money you have spent on your pets.
Yeah.
And they may be your best friends, but
Yes.
not on the
And
tax
are,
return.
like, and people really care so much about their pets. Everyone calls their pets their family members, and it's well. But viewers, you cannot deduct all expenses done for pets. So that brings us that you had, during your answer you had mentioned something about dependents as children. Claiming children as dependents, and can you tell us about child and daycare expenses? What about those?
Sure. So when you have children and you have, both husband and wife, they both are working, and you end up allowing your child to be left with someone close to you who's going to take care of them, or they put them in a daycare center, and you're spending a lot of money. The government does allow $6,000 in daycare expenses for 2 children. This $6,000 then it gets converted into a tax credit. Now this tax credit could be $300 for 1 child, all the way going up to $1,050 in tax credit, which is dollar to dollar tax deduction from your taxes. So it's an important deduction.
Well, thank you for that information. There was when we're talking about dependents, one of our viewers has asked that if his parents were visiting from India and they have stayed with them for most of the years, the parents do not have social security number. Can they still be claimed as dependents?
Parents are the very first on the list of dependents that people can claim, but they must have a social security number or a tax identification number. So if the children have supported their parents for most of the year, they can take the deduction, but they have to apply, the parents have to apply for a tax identification number. There is a process that you have to go through. You have to show your documents and passports and a couple of other documents. The government will assign you a tax identification number, but in the year in which you are applying, the parents have to be physically here to get the tax identification number.
Okay. I think this was something we discussed last week, and we got further questions about tuitions, school tuitions and college tuitions and those fees. So the question is, what deduction can we take for school and college fees for our children?
So there are two areas of education expense that parents spend on. The first one is up to high school, and then the next one is college expenses. So the expenses that the parents incur for high school expenses or elementary school expenses, even if they are going to private schools, that is not deductible. That is a personal expense, and you do not get a deduction on the tax return. However, when the child goes to the college, all the expenses related to the college expenses, the tuition, the equipment or computers, you can take those deductions. The government does allow up to $4,000 deduction for each child. Again, this expense of college expense, you can either take it as a deduction, above the line deduction, or you can take a tax credit of $2,500 for each child. But the condition is that you must have a Form 1098-T, which is a receipt from college that you have paid for the tuition. So the Form 1098-T is required for you to get a $2,500 tax deduction in your taxes. So make sure that if you're paying for your tuition at the college, that you do have a 1098-T from the colleges for each child.
Lalitji, it is sorry for that. Lalitji, last time you had mentioned about the 1098-T, and my son just started as you know, my son just started as a freshman in Stony Brook. So immediately after the show, I went home and checked whether we had received the 1098-T or not. We have received it, and I'm going to claim that. So thank you for that information.
Absolutely. We make sure that we do ask our clients as well.
Okay, this is an interesting question. So this came down to the conversation we had last time about standard deductions and itemized deduction. Uh, this gentleman came standardized deduction in the previous year, so he did not itemize his mortgage. Now this year he's going to itemize his deduction. Can he claim both his interests as a deduction in his itemized deductions?
No, you cannot. The expenses that you incur in a year, you have to claim in the same year, unless they are carry forwarded. Now, in this case, because he have taken standard deduction, he has given up the right to itemized deduction. So he lost that because his standard deductions were more than the itemized deductions. So in the next year, he can only take the mortgage interest that he paid in that year.
Okay, okay. Now, one of the questions that everyone has been asking is about these health coverage and this new form. I think you mentioned something 1095 about the form. Can you please explain to our viewers the new law and what people have to do with these forms? What are the types of forms? Can you elaborate a little bit, please?
Yes, sure. Pareshji, this is again another area where people have a lot of confusion. So starting 2015, Obama has made it compulsory that everyone must have a health insurance, and the government has come up with a form 1095 that the institutions are issuing. So either the employer is issuing or the insurance company is issuing. You must have the 1095, which is a certificate of health insurance, which proves that you did have. If you don't have that, or if you don't have the insurance, then we as preparers have to add an additional penalty in the tax return. So make sure that you do take the 1095 form and show it to the preparer that you did have insurance for each of the 12 months that is listed in there.
That's cool. So what you're essentially saying is under Obamacare, everyone has to have health insurance, and this form kind of proves that they have had health insurance coverage in the year, and if they do not have that, then there is a penalty for that. So this form becomes very important. Otherwise, actually, you might bleed money out of your pocket.
Absolutely.
Okay.
Absolutely. Yes.
Okay. So that brings us to the hot topic. Again, we've received questions on the hot topic of FBAR, and viewers are asking, there are two questions, I'll combine them together kind of, actually there's several questions, kind of two major categories, and I'll combine them together. When and how do I have to declare my savings account in India? And I have never reported in the past, but now banks are sending us letters to do the reporting. So can you explain a little about that, please?
Paresh, this is another really very important area and very hot area, like you said. People are asking a lot of questions. People have not reported in the past. So I'm going to break it down into two different areas. When you have an overseas bank account, you are earning interest and you have a bank account. They both are subject to reporting. So in your tax filing on April 15th, you have to report the interest income or the dividend income or any kind of income that you have earned overseas. You have to list that. That's one part of it. The second part of it, because you have a foreign bank account, there is a requirement that you must report that in a separate report called FBAR report. And FBAR report is Foreign Bank Account Report. It is mandatory under FATCA regulations. US government has signed an agreement with at least 50 countries, and including India for that matter. And India is now reporting to IRS if you have an overseas account. So do not delay this, do not forget this. Otherwise, there are severe penalties. For the previous years that you have not reported, there is a amnesty going on currently. Under that, you have a reduced penalty. So I would encourage you that you contact some tax preparers and file this amnesty so that you are not penalized on the heavier side.
Okay.
It's very important.
Thank you, Lalitji. All great answers. Really appreciate your time today. And we'll see you in a couple of weeks where we shall be discussing about traditional financial planning and what best to do in your world of financial planning. Thank you very much.